Google just reported its earnings for the last quarter. We're going to dive deep into exactly what happened. If you're planning to buy Google, do not miss this video. The stock is currently down 5%, so you can tell the market is not happy about the earnings report. Personally, Google is a huge part of my portfolio, so I'll share why I'm unhappy about this earnings report as well. So to begin, on paper, they did beat their earnings. Talk about the good things that happened to Google this quarter. So the first thing I like and why people buy Google is because they have a really diversified income stream. Not only they're growing the revenue line, they're also making a lot of money. Their profit margin is really good. The second best thing that happened out of this earnings report is the Google Cloud revenue growth. The reason why this is so important is because the cloud division is the biggest cash cow in any business. Just look at Amazon, just look at Microsoft. Google is showing that their cloud division is catching up to the market leaders. This just shows you how much of a cash cow Google Cloud really is. The best part about Google Cloud, their growth is not stopping anytime soon. Their backlog almost doubled from the last quarter. And also, let's not sleep on YouTube, because in case you forget how big YouTube really is, the red bars are Netflix streaming revenues. Black bar is YouTube's ads revenue. And the last good thing is Gemini. Gemini had 750 million monthly active user last quarter, and now they have almost 1 billion monthly active user. Let's talk about the negative and the downside of this earnings report. First negative side is they actually did not beat earnings. The reason why they beat bottom line on paper is because they have $99 billion worth of unrealized and realized investment gains in private companies like SpaceX. Take that unrealized figure away, they actually missed their profitability targets, and they reported a negative free cash flow quarter for the first time in 20 years. Yes, Gemini growth is good, but it also requires more compute, which is why Google is telling us that they're going to spend more money on AI. Always mention how important interest rate is. Google has so much debt right now. They're paying about $1.2 billion per quarter just on the interest expense. Those are the reasons I'm not happy about the earnings report. Because on one hand, yes, Gemini growth is looking good, but on the other hand, Google have to keep spending more money to keep up with that demand in Gemini. But Gemini is not making any money, and it's not promising to make money later on. And because Google is spending a lot of money into AI build-out, it puts a lot of pressure in the rest of the business. They must continue aggressive growth every single quarter, otherwise shareholders are going to be like, what did you spend money on? This company just went from a super profitable business model now to be focusing a lot into AI. And how are we going to get that money back from all these investments? So yeah, this wasn't a good earnings report.